Hello, and thank you for joining SBA CIC for a short webinar on how to price your goods and services. So before we start, I just want to kick off with some key facts. A recent survey by SME Loans showed us that 64% of the UK workforce have got entrepreneurial dreams. That said, 41% of those individuals surveyed had fears surrounding money. We also know, as a result of the Small Business Finance Market Report, that in the last decade, 8% of businesses have chosen to self-fund rather than source external funding for their business. So why bother getting the finances right? What it boils down to is profits and liabilities. So in terms of your profit, consider, am I making a profit? Do I have enough cash? And have my customers paid me? And on the other hand, when considering your liabilities, think about how much can I afford to pay myself this month? Can I afford my business bills? And how much do I need to set aside for tax? One of the first things to think about when starting your own business are your own personal finances. The reason for this is because self-employment does tend to come with a regular income. So think about how you intend to finance both yourself and the business initially. Will you need to continue working as the business grows, or do you have enough money coming in for you to be able to take the plunge? So on this screen, you will see an example of a personal survival budget. Now, this document is only designed to include the household income and running costs only. So what is meant by that is that you should not include any prospective income from the business itself. Not only that, but you should be realistic, accurate, and honest. This document is designed to help you and will help you to assess your financial future moving forward. And finally, this document is designed to include all of the income throughout the household. So it's not just you. Think, if you have a partner, what money do they bring into the home? Or say, if you have a lodger, how much money are they paying you? This all goes towards the household income and will help you to assess whether you have a monthly shortfall or surplus. So we're now going to have a look at overhead recovery. Overhead recovery is a process that is designed to help us to pay our indirect costs. Indirect costs are payable regardless of how much money you've made that month. So think along the lines of your mobile phone contract, your internet subscription, or your office rent. And the way you do this is by dividing your overhead costs by either your billable hours or the product sold. So for example, say I have £50 worth of overheads made up of a mobile phone and my internet. And I know that in my business, I can either work for 100 hours or I can sell 100 products. So I would divide my overhead cost of £50 by the number of billable hours or products sold, which in this instance is 100. That leaves us with a figure of 0.5. So that means that we need to charge out each hour or each product at a very minimum of 50 pence in order to cover our overheads for the month. Now, when it comes to pricing your goods and services, you would then want to add the cost of making or providing the product or service, and then a proportion of profit, which we will look at in a brief moment. But before you start thinking about profit, be sure to do some market analysis. For example, have a look at what your competitors are doing. What are you doing differently and where do you add value? Are your products eco-friendly? Do you provide second-to-none customer service? Are your products the cheapest on the market? Consider your demographic. Ask your clients what they would be willing to pay and ensure that you're marketing towards the right kind of clientele. And also have a look at sales. How will you make sales? Will you need to think about the cost of covering a third party to support you with that? So you've done the overhead recovery, you've added the cost of producing your goods and services, and you've done your market analysis. So it's now time to have a look at profit. And there are two models that we will explore in this context. The first is cost plus pricing. So this takes the cost of producing your goods or services and adds an amount that you need to make a profit. This is usually expressed as a percentage of the cost. And there's also value-based pricing. Now, this focuses on the price that you believe customers are willing to pay based on the benefits that your business brings to them. So this brings us to the end of our whirlwind trip around pricing goods and services. We've had a look at personal survival budgets, overhead recovery, market analysis, and pricing models. From this short video, you should have the basis of how to price your goods and services for your business moving forward. Thank you for joining us today, and if you happen to have any questions, comments, or queries, please feel free to contact us using the details on screen.